We're visiting the Constitution State today on Apart Market Dynamics from MPF Research. And for those of you who aren't state nicknames experts or didn't look at Wikipedia just before filming a video, that is Connecticut. And the big question on the agenda today is, does Connecticut's apartment occupancy rate reach the high levels that are typical all across the Northeast? And how's the area doing on rent growth? I'm Jay Parsons, and I'm here with Greg Willett, and we're going to highlight the apartment market performance in Connecticut. First, some housekeeping. We've got a new set of data that we're publishing on the apartment sector for all of Connecticut's metros, and it also breaks down the numbers across 11 submarkets. And since this statewide analysis is a new view for us, Greg, why don't you give us the CT 101 background? What sort of product base are we talking about here?
Jay, I will be glad to share my vast knowledge of the Connecticut marketplace. Now, if you look at government stats, they divide the state of Connecticut into 6 areas that they call New England city and town areas. You put all those spots together, and there's actually more inventory than you might think. By our calculations, the total base stands at 212,400 units. For comparison, that's almost exactly the same size as Miami-Dade County. You look at some similarly sized metros across the country, Orange County, San Francisco, they're just a little bit bigger. And then Baltimore and Tampa are spots that are just a tiny, tiny bit smaller than Connecticut. Almost half of Connecticut's stock is in Metro Hartford, and most of the rest is split between New Haven and the Bridgeport, Stamford area. Then there's a sliver of product over in Norwich, New London, toward the southeast corner of the state.
And those 212,000 apartment units are by and large full, mirroring the occupancy rates that you see all across the Northeast region. And let's look at an occupancy summary for the key markets in that part of the country. New York on top with an occupancy rate of 97.4% as of Q1 2013. Most of the other spots are clustered with occupancy rates of 96 to 97%. Northern New Jersey, Pittsburgh, Providence, and Boston. Plus, Connecticut is right there at the bottom of that range, registering occupancy of 96% even for the state overall. Connecticut's occupancy rate has been hovering at basically full levels, 95 to 96%, since the middle of 2010. Philadelphia is the outlier for this region, and it usually is. Occupancy there at 94.6%, lower than elsewhere in the Northeast, but similar to the U.S. average, which was 94.9%. With overall occupancy so high across Connecticut, there is not much variation when you slice and dice the data. All product segments record occupancy right around that overall norm of 96%. Most submarkets do too, though vacancies are a little more common in a couple of spots. We'll highlight those: the Waterbury area of Metro New Haven and the Northeast Hartford submarket, 94.7 and 94.6.
And Jay, you talk about Connecticut being fairly typical for the Northeast in terms of occupancy, and that's actually true for rent growth as well. A chart for you here showing rent growth over the course of the past few years. And like in the rest of the Northeast, you can see that it got pretty hefty there for a while and has now cooled off a little bit. Back in late 2011 and into early 2012, we were seeing annual rent growth of 4 to 5%. Since then, the growth pace has moderated, with monthly rents for new leases in 1Q of 2013 up a modest 1.4% compared to the early 2012 prices. Product niche isn't really a big deal in this one. They're all doing about the same, and that's pretty true as you look across the neighborhood numbers as well. But we do have one submarket standout to highlight for you, and that is the Southeast Hartford, Middlesex County area. In that one, annual rent growth right now is at 4.9%, and it's really been at the top of the charts throughout the course of the past 2 or so years.
Now, for much of the Northeast region, we're expecting that performance over the next year will pretty much mirror what's happened in the past year. So is that true for Connecticut as well?
Well, certainly this is not going to be a high-demand area, and that mainly reflects that Connecticut is a slow growth economy even in the best of times. Right now, Hartford is gaining a handful of jobs. The rest of the state, flat to slightly negative. So for the state overall, I mean, you're just barely above zero. But it's also a pretty slow construction environment as well. So you don't need a whole lot of demand to keep up with that construction volume. We've got 3 or 4 pretty sizable projects underway, and the other ones are pretty small, so not delivering a whole lot of product, and we do think that occupancy basically stays stable. Rent growth, again, moderate. We'd anticipate somewhere in the neighborhood of 2% or so over the next year.
And that wraps us up for Connecticut. So until next time, for Greg Willett and for MPF Research, I'm Jay Parsons. Thank you for watching Apartment Market Dynamics.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.